This time last year, analysts were gloomy on what was in store for the stock market in 2023, especially given issues such as the war in Ukraine, the prospect of higher interest rates, and expectations of a recession. But this year, markets has defied investors' expectations here, and the S&P 500 up more than 18% year to date, thanks to a strong outperformance among megacaps like Apple, Microsoft, and Nvidia. With more stock market bulls making the case for new highs in 2024, investors want to know, what are the best ways to play these anticipated gains in the year ahead? For a look ahead into 2024, we're joined by Althea Spinozzi, who is the Saxo Senior Fixed Income Strategist, and we've got Dave Mazza, who is the Roundhill Investments Chief Strategy Officer. Great to have you both here, and an early happy holidays to you. Althea, I want to begin with you. If we're looking out to 2024 and dusting off the crystal ball to the extent that we may, or it's out of the shop, what are the key things that investors should be watching for that could potentially propel the markets to some of the new highs that some out there are expecting?
Well, it's not going to be different from 2023 in terms of what things to look out for. It's going to be inflation, growth, and unemployment. And realistically, we believe that inflation is going to have lesser importance than growth throughout 2024, but central banks are going to be cautious about that. So right now, the market is pricing 5 interest rate cuts by the end of 2024. We believe that that's ahead of itself. And what we are going to see probably at the beginning of 2024 is market pricing out some of those interest rate cuts. And that is likely to provoke another rise in yields that are going to probably hit again 5% before the bond bull market begins.
David, I want to ask you, what do you think about the Magnificent Seven and their setup for 2024? Is it still the place to be?
I'd have to agree, because I'd have to agree with my fellow panelists' comments. If we take a massive step back, the economic background hasn't changed much. We know growth is slowing. We're hoping for a soft landing. Inflation is still high, but coming down. And the Federal Reserve and other central banks are going to be incredibly cautious about cutting rates again to spur, I think, some of the euphoria that we saw before. So investors actually are likely going to continue to stick with what's worked, at least for the first half of 2024, and that's the Magnificent Seven. These companies, again, there's a lot of naysayers out there about their valuations, but they offer incredibly high margins. They have stable pricing power, and they're more than just one business, right? Apple has many businesses. Alphabet has many businesses, Meta and the like. So we think of them as just 7 securities, but if you pick them apart, they offer a lot of different opportunities across the technology and consumer space.
Althea, want to also get some of your big predictions here as you're looking out to 2024 and perhaps some outliers that you're going to be tracking for.
Well, yes. So I definitely want to look at the divergence between central banks in the meaning who's going to cut rates first. We believe that is going to be the ECB. But realistically, that means that the ECB might be welcoming more inflation at home because commodities are quoted in US dollars. So if the ECB is going to cut rates, the euro dollar will fall, and that might reignite inflation. And it's not going to be an easy task for the ECB in 2024 for the simple reason that Europe is already in a recession. So it's already, the ECB fundamentally is already choosing inflation over growth. And if that divergence become increasingly next year, especially with the Fed and the ECB looking to cut rates and the Bank of Japan hiking them, then it's going to be a volatile year.
And David, I want to get some of your predictions as well. You have some outrageous market predictions for 2024, so take us through what yours are.
Yeah, these are not my base case, but I think it's always fun to think about what could occur, and not just fun, but prudent. And one in particular is around the presidential election. We just had a 4th Republican presidential debate, and of course, the lead candidate has not shown up for any of them, and he's still in the lead. But what's happening with the polling with Robert F. Kennedy Jr., I think investors should not ignore. This is probably the first time, going back to Ross Perot, that we have someone who can credibly be perhaps a third party candidate. Now, it's not a clear path toward that, right? There's a lot that can happen between now and November, but we know increasingly, particularly as that simply the calendar turns to 2024, investors are going to start thinking about the election and the volatility that could bring. So I do think investors need to prepare for a particularly more volatile back half of 2024 than we've seen. Again, I think there's going to be questions about when the Federal Reserve may start cutting rates. But honestly, what they tend up not doing is cutting right before an election season from a political standpoint. So I really have been advocating investors to keep an eye on this, regardless of your politics, because it's going to potentially play an impact on portfolios.
And David, really quickly, I want to ask you one follow. You said this is not your base case. What are you looking for? What's the catalyst for a further breakout beyond just the strength of the Magnificent Seven?
Yeah, well, it's interesting. I think at some point, once we start pricing in the actual opportunity for rate cuts at some point in a more material way, and I'm not talking about the moves that we saw this week. Some of that is a lot of short covering and reversals into small caps and non-profitable companies. What I'm really looking for is, do we get that material slowdown in the job market? It seems as though that hasn't happened yet, even with the most recent claims data and the ADP data earlier this week. If that happens, then I do think we're going to see the idea that we'll see smaller caps rally, we'll see unprofitable companies rally in a more material way. But until that happens, I think the economic environment is going to continue to favor the largest companies, the companies with high profit margins, and the ability to navigate what has become an uncertain economic environment.
Indeed, and certain it is. All right, Althea Spinozzi, Saxo Senior Fixed Income Strategist, and of course, David Mazza, Roundhill Investments Chief Strategy Officer. Thank you so much both for joining us this morning.